Live streaming is on.
Hey, good morning and evening, Globe World from here. I'm Dan Gay, Chief Marketing Officer at BlockCerts Blockchain, and we're very excited to have kind of a lit fuse this morning on what we're talking about because all kinds of sparks have been flying about what's been happening this week. And we're going to talk about InfluencEnomics, crypto, credibility, and change. And I'm joined here by my colleagues, Mr. Daniele Mensi, who's the president of Fusion Funder. Good evening to you, coming to us live from Rome.
Yeah. Ciao Dan, come stai?
Come stai? And then also Mr. Tim Vasco, who's the CEO, founder, and the chief architect of BlockCerts Blockchain. Good morning to you, Tim.
Morning, Dan, Daniele. Great to be here once more right before the weekend.
Yeah, Ben, another week just screaming by. So before we get started, if you like what we're saying, please click on the thumbs up button below. And then also, if you haven't done so, please click to subscribe. Our channel continues to grow, and we continue to bring thought-leading content and information in changes to businesses, blockchain, crypto, etc. And this morning we've got something that I can't wait to start talking about. You know, in any gold rush, you have real progress, and then you also have scammers that are trying to really benefit from the stampede. It's something that we saw in the .com.
I was just thinking that, Dan. It reminds me of .com. That's exactly what was on my mind this morning.
Where you see, you know, I had some things I invested in that went bust, but I also had Amazon, a few that did really well. So,
well, you know, it's funny. Jamie Dimon started out from JP Morgan, started out this whole Bitcoin's a bubble. He got the bubble and the BS thing right. It was just not about Bitcoin.
Right. Yeah. Right.
He got that wrong, and it wasn't about blockchain. It was about what all the scammers and people are going to do with the information, just like .com. It was the same thing, but there were those few golden nuggets inside that people had the I guess the tenacity and
you had to pan for the big ones.
Yeah, exactly. It's mining. That's the real mining, finding the gold, right?
It is. And, you know, right now there's great utility, great efficiencies that are being created, and great new business models. And we're going to talk about that. But there's, as you said, there's also BS. And as my father-in-law, who's 94, has said for many years that I can remember, but there's more bullshit than a bullshit factory.
Yeah, exactly.
And there's a lot of that going around out there. But what's really amazing is what is being built for tomorrow, and that's what we're going to talk about as well. So with that, Tim, I'll kind of turn over to you. I know you've got some exciting things.
You know, we always talk about Web 3.0 and the next iteration of the web and everything, and it's interesting as we bring up new materials. We're bringing up a lot of new things this month, and especially this summer, really focused on new elements. I think about what the original, there were actually 15 inventors of the web, 15 inventors of the internet. And what their original idea was for the internet was to create this space that was free and openly accessible. And the internet's not free.
Right.
It's certainly not openly accessible. So we're going to talk a lot about that as we go forward. And one of the things that you mentioned is this idea that we came up with that we've been watching for some time now. I mean, this isn't just this week; it's for years. This idea of InfluencEnomics, and as you know, Dan and Daniele, we always talk about, well, the influencers could do this or the influencers could do that but the question that we have to ask. Influence has always been there. It's always been an idea of marketing, advertising. The digital markets are really just a new marketing channel, really. I mean, internet is really a channel for providing information and communication. It's finding that which is the information that's credible and what's not credible. And how people and organizations or the influence market is taking advantage of the fact that there's a huge booming really market out there that's got a lot of functionality and credibility, and what hurts it. And so this is the Dink Doink cryptocurrency scam. The first thing that blows me away is how these Dogcoin or Dogecoin or whatever, and all these names don't just tip you off. Like,
hello.
I mean, it just, I don't know. It just kind of seems like Dink Doink. Okay, is this even real? Was posted on Reddit, right?
Right.
Today, I looked at a chart on this Dink Doink coin. I'll pull it over here. And I think it's down, oh, look at that, 12%. And look at what it's trading at. Like point, how many zeros is this? 0, 0, 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 zeros. I can't even say that number. And this is what's happening on that today. You look at trading volume. So this thing got about $1 million, 1.2 million bucks, and its volume is about $60,000. So there's really nothing significant going on with this. But what is significant is the fact that it's media.
Tim, look at the supply there though too, 10 quadrillion.
Yeah, well, that's the whole point. It's just like the maximum supply is this. What's that even mean, right?
Yeah.
How can
what
you
is a
calculate?
quadrillion? I have no idea.
And the difficult part about these things is, and it was this is where we get back to .com. It was very much like .com, where we had ideas that could be put out there and then bring money in. So these were ideas. They weren't functions. So today we're going to talk about function versus fiction, right? Fiction is pretty frictionless, actually. So it's easy to follow these things, and there's this idea of post-truth, and posting truth is what drives all of this. So let's talk a little bit about all of these things happening. Now we have this FaZe clan, and this one, Save the Kids, is a knockoff of Save the Children. It's a charity scam, and there's possible legal ramifications for this kind of charity fraud type thing going on here. Who knows? The point is that when you look at these things and you start seeing them out there, it doesn't take that much to dig a little deeper and say, is there substance? Like, is there anything of substance? What can you do today? What is the functionality or the utility today? Is this an idea? Is this a marketing scheme? Or is this an actual platform that has functionality?
Right.
I'll tell you an easy way to tell the difference. Functionality is very hard to deliver. It's very hard, but if there's something you can use and it actually works and it actually has some functionality in there, that's called utility, right? It means something, you can do something with it, right? If it's just a story and you're chasing the story, it's likely fiction. It's an idea. And it's pretty fundamental. The amount of functionality isn't as relevant as the fact that there is functionality. So let me use a very well-known wallet, MetaMask. It's functional. It does a lot of stuff for one thing, for cryptocurrencies, right, Daniele?
Yeah.
I mean, and it's stable. It's stable as hell. It's been there. It doesn't break. It actually does what it's supposed to do. It's very limited in its function, very, very limited in its function, but it does that function very, very, very well. Well, guess what? The Uber app is very limited in its function too. you get a ride. That's what it's intended to do. But there's a massive infrastructure behind that organization and that technology. So infrastructure can be seen in technology when you pull down a function. Just go in and pull down a function. Ask, look, if it's there, it's real. It's a utility. So,
yeah, just wanted to make a couple of points on this. The first one about the scam and the second one about the wallet. So I think we are in the process of moving to a decentralized web, and this is a multi-year process. So from Web 2.0 to Web 3.0. And this is a journey that does not happen overnight and does not happen with the downsides. So the fact that we're going to get, control of our assets, including our data, it also implies that we need to be literate and educated on how to do that. So this means there is a kind of an educational gap that we all have to fill, to make sure we don't mess up. And exactly what's going on here. So you have scams, and you will keep on having scams, more or less sophisticated, doesn't really matter. And any of the average user should be in the position, should put himself or herself in the position to check and how to check whether or not this model makes sense. So the web itself will give more and more instruments to check, go into the ledger and see whether this is legitimate or not, and having the tools to check it. But this means that the average user, he should not really, fold their eyes and someone else is checking for him or for her. Because going to a decentralized means we take control. And then at the end, it's us. So meaning that we expose ourselves to the upside, but also to the downside. And we need to fill this gap anyway.
And when we get in there and we start looking at the people who are tweeting and driving economics, let's start looking at what it means to read between the lines. Now, this was 2018 when Elon Musk, famous tweeter, got nailed by the SEC for actually tweeting something about Tesla that drove the stock through the roof. And what he tweeted was, I guess I'll just take the company private, right?
Yeah.
Which was complete BS. Like, that was not real. It wasn't real information. But this is InfluencEnomics. This is actual InfluencEnomics. Now, in this case, his settlement required that he step down as Tesla's chairman. He immediately got shut down on that by the SEC. They appointed additional independent directors and had to pay $40 million in penalties. This all happened in 1 week. So that was, now, is Tesla a real product? Yeah, you go buy one and drive it. Was it when it was coming out, when it was being developed? There are some great videos online you can go find where the car doesn't work. There's all kinds of technical problems. One that sticks in my head, and I'm going to get this wrong, so I apologize if I do, but it just stuck in my head, is when Elon's sitting there and he says to his engineering team, so what you want me to do is go back out to all of these people who invested in this, tell them we still don't have a product, your car is waiting, your utility is waiting, and they need to put in more money. And the whole other side of the room is looking at him like, yeah. And he goes, okay, I can do that. So that's what it's like building a real product. Like, that car was awful to get off the production line. It's a beautiful car. It's a beautiful success story of something that should have really failed so many times. But then after the fact, when we start getting into, now we've got this very wealthy and successful person and they're using InfluencEnomics, we see what that can drive. Go ahead,
Tim. I was also going to just share like another quick story that like Mark Levine of the founder of Dollar Shave Club was once asked, what's the secret to your overnight success? And he said, the 7 years prior in building this success.
Exactly. It's not overnight. That's the secret. It's
Yeah,
it's kind of
because
like
everyone assumed it was overnight, but he had been slugging away at it for 7 years.
that's
before
right.
people.
And I always love the little line out of Kung Fu Panda, right? Where he gives his son the secret to the secret ingredient noodle soup. There is no secret. Like, it takes a hell of a lot of time. It takes a hell of a lot of work. There is no secret. There is no overnight success, especially when you're building these things that are infrastructure. Now, these things, even Bitcoin, it's been around since 2008. Think about that. This is not a new cryptocurrency. This is a proven model that spawned the generation of what we're facing today, Web 3.0 and blockchain. Right. 2008, at the cusp of the financial meltdown, is when that technology, that fundamental technology, came out, and it had a litany of challenges and problems. So we have to separate out what is true value that's being built and delivered today from really when it started, and this idea of pumping up stories or InfluencEnomics that drive these spikes are not fundamental. That's fiction. It's actual fiction. It's supposition. And supposition is always a bad investment strategy. It's always a bad business strategy. You have to take your fundamentals and look at what's the actual basis of longevity. And in technology, what we have to do is say, and what do we have to build to get there? That's why when you see these big dollar investments from the Silicon Valley groups, they generally invest on momentum, early momentum that has some functionality, and then they dump a ton of money into it, and all these engineers go to work. That's generally been the Silicon Valley model to create things. And then sometimes it works. Google, Amazon, Facebook, on and on and on. And sometimes it stalls or fails to gain traction.
Yeah,
right?
But and now they're investing in a meme called Dink Doink.
That's right.
We have also the story. I mean, one of the story of the week. So we have a company which is a crypto derivative exchange, which is called FTX.com, led by Sam Bankman-Fried. They have done a funding round this week at a monster valuation of 16 billion, and they're in business since 2 years. So it's one of the first, if not the first, decacorn, no longer unicorn. So we break. So the first decacorn to reach such a valuation 2 years only after the launch. And we're going to experience this more and more and more because of the network effect in the business we are talking about, like Bitcoin, crypto assets, and in general. So we have a kind of a velocity into the InfluencEnomics that also impact valuation and funding rounds. That it's unprecedented. That it's a key factor into the underlying economy.
Exactly. And it's a real global market now, obviously, versus really focused NASDAQ and other markets. It's a global market, which
you have so in the case of FTX is just an example. They have been launching a business that we're doing in terms of yearly turnover, so a couple of, I think 10, 20 millions a year the first year. And now they are in the hundreds of millions 2 years later, but they are sitting down in a market that's worth quadrillions, because we're talking about the derivative market as a whole. That is something we struggle to figure out because we compare with the past. And I think we are living in an unprecedented area, so a period of opportunities and velocity.
We really are. And I think that when we get through this kind of friction of what it means to be in this era, what we see when somebody like Musk tweets something and sends shares of a company, I think Samsung is a big owner in this company, and it sends it it's soaring higher. Well, is that real? There's real companies behind this that I believe. I don't know that much about Baby Shark, but what you just said,
Daniele does, right?
What's that?
Yeah, I do. Yeah.
And what's that?
You
know
have
about
a
that?
3-year-old to a 7-year-old.
Yeah,
you know
okay.
Yeah, you know, Baby Shark, by the way, is the most viewed video ever on YouTube. Probably.
Really? Wow.
Yeah.
Well, there you go.
Yeah.
And how many?
And you don't want to get it stuck in your head because you can't go to sleep with it going through your head.
Yeah.
Yeah.
So, and that's what's interesting is as you start seeing this, you see the matching of InfluencEnomics and what guys like Musk can do to send prices surging. This is the fodder for day traders and high frequency trading.
But there is here, I think we have what happened this week. So Elon Musk with Jack Dorsey, Cathie Wood, they had a kind of a live event talking about Bitcoin and Bitcoin mining. So 3 days ago. What happened? So is this true what is written here? So the price went up. I mean, this is May, but happened the same 3 days ago. And even before, so starting the 8th of February, when the Bitcoin price pumped because of Tesla announcement buying 1.5 billion into their treasury. But what happens, and I think it's very, very key and important to mention. So if we take this week, so the price of Bitcoin did increase by, let's say, 5-6%, something like this, because Elon Musk announced that both SpaceX and Tesla, they keep Bitcoin, they're not selling. The price increased, but did not increase as it used to be. Why? Because the open interest, so the leverage in the market has dramatically decreased. So just a couple of months ago, when the open interest was at the roof, what are the all-time high, every small announcement in the up direction, the down direction should have pumped way higher because you have an ultra leveraged positions. While leverage is decreasing, then you have such messages have a lower impact. So in my view, when you see such a movement because of a tweet, so regardless whether price is going down or up, doesn't really matter. But when you see such a strong movement because of a tweet, what it signals is not that the price or the asset is overpriced, but you have an ultra leveraged asset. And then you have a strong signal on how to behave, because it means you might have a huge directional movement, whatever assets we're talking about.
And this is kind of the new idea of fundamentals versus fiction, and it's very hard to filter through all of that, right? It's very difficult. And yeah, are there opportunities? For sure. Function, aka utility, like what we do, can be pretty boring. And it can take an incredibly long time. Take it from me. My beard was not gray when I started this journey. And then you've got fiction, aka BS, as you said, Dan.
That's
or
right.
The idea, which is this idea of influence. And a function formula, go look it up on Wikipedia, you'll see this. Input, the function F, and output. That's utility. It's a machine. It's an engine. Over here, influence or fiction is input. Output is not there. And you got InfluenceEnomics, right? You've got all the tweets and what it looks like in that propaganda, that idea of what people are doing. So the challenge being how we match this with a idea of InfluenceEnomics to get true function of the Web 3.0 into the marketplace. That's really what we work on all the time at BlockCerts is, okay, we've got these inputs, we know these functions, we've got these outputs or expected outputs. We got things like bugs and stability and things, all the boring stuff that's behind the scenes, so that when you actually blast that out there and this is really happening, it doesn't crash, but
Yeah,
you have an output.
and this, I mean, this is very important for people running fundamental analysis on an asset, because if you take, for example, a crypto asset, whatever you take, you can take Cardano, you can take whatever. So one of the first thing to be done is to assess the out of the market cap, out of the value of that asset, how much is captured by the utility, by the network effect, by the community, versus how much of the value of that asset is captured because of intraday or because of leverage.
Right.
If that asset is leveraged, or eventually if there are also derivatives out of that assets. In our case, I think we are in the process of launching, hopefully in a matter of days, our own token to secondary market. Obviously, we launch first on the spot market. So we're not considering right now to run on derivatives. And I mean, our hope is that such an asset is strongly attached to the utility of the underlying technology that is pegging that asset and is trying to capture.
It's software, right? So the way I like to look at it, Daniele, is it's a Google AdWord. An AdWord has a big infrastructure behind it, but it's still a bid thing. So anybody who's ever used a Google AdWord, they're actually buying a token to create marketing and media. So it's a software asset that you pay Google for. The difference in a utility is there an output? Is there a function? And does that function relate back to how that software can be used? And then what's the value of it? This actually happens every single day, and it has for decades now in the marketing model of the internet. And there are all kinds of engines that emerge. They're just not as mainstream as crypto, but one of the engines that's out there is called RTB, real-time bidding for ads. So what a lot of people don't know is this influence market's always been an underpinning of the internet since I was in some of the beta groups testing AdWords back in the early 2000s, very early 2000s. Yeah. And the influence of those search results and so forth are, and then what the output, the actual click-through and function rate and lead capture and things like that happen actually create value. And last time I looked, that was a little over approaching $140 billion in revenue for Google. Right? That is a token. It actually is a functional token. It's probably the most successful functional token in the world. And it's a piece of software. That's what it is. So it's got a value, a very big value to it. Some of those bids can get really high. And it's a trading engine that's all centralized and controlled by Google. It's their biggest source of revenue. Yeah. And Facebook has it. LinkedIn has it. Google has it. This has been around for a very long time in marketing. We're simply saying that other software can do that too. Like all these business tools we use, all these daily tools we use, meetings, what we're doing right now on the BlockCerts Meet Certain platform and e-signing and all those can do the exact same thing, provide utility and have this value proposition of how valuable is that to the market? Because that's what always drives value, right? And function versus fiction. Is there an output? If there isn't, it's an idea. It's BS. It might not be BS if you get a Silicon Valley company behind you with 23 or $100 million, which we'll talk about in a minute, right?
Well, and Tim, you and I had a call with an influencer yesterday who was amazed by what we're doing, which is obviously the function. And when you marry those two real things, there's some real magic that can happen in the marketplace.
That's always been there. It's always been about, is there real utility? And do I have an item? I don't care if it's a automobile, a Tesla automobile, or an AdWord. Is there an item that provides an output? If there is, you have function. If there isn't, you have fiction. It's that simple. It's pretty black and white, really, when you think about it. But our world is based on this idea that came out in 2016 with the word of the year, post-truth, right? So post-truth is really what we're dealing with. And this started, the Oxford Dictionary said, this will be one of the defining words of our time in 2016. Post-truth. And go look it up in the Oxford Dictionary. Post-truth is an adjective defined as relating to or denoting circumstances in which objective facts are less influential. Objective facts, function, are less influential in shaping public opinion than appeals to emotion and personal belief. That was the word of the year in 2016, highly driven by the politics. And guess what? The function behind that word became the Facebook scandal, Cambridge Analytica.
Right.
Post-truth became an economic influence, systemized influence model. And that's never changed. That will never change again. It will always be a fundamental. So as Daniele said, now if we have this post-truth world where posting becomes truth, it doesn't. What are the facts? How do we know? And what's the logic that we place behind that to determine those facts of function? That's the incredible thing about the world right now. This is all pre-pandemic. This is 2016. The world's going crazy with politics and, you know, influencers and all these new things coming out. And post-truth became a real thing, right? It became a word in the English language. So, you know, going into that, then what we look at is function. What is function? Okay, so going back to the dictionary, an activity or purpose natural or intended for a person or thing. Bridges perform a function of providing access across the water. So a functional model would be then building that bridge between that influence and set of ordered pairs. Sound like trading pairs, Daniele?
Trading pairs.
You know, a set of ordered pairs, example 2, 4, 3, 5, is a function that says 2 is related to 4. So if there is influence and functionality or fundamentals, at which we would call it in the trading world, if there's fundamentals, you have a function, you have a set of ordered pairs. Over here, you have a technology tool, and over here, you have a value attributed to that. In the current model of cloud, that is the price you pay for a seat, right? In the new model of cloud, what we're decentralizing is the price you pay for a token that gives you access to everything, 100% of everything. And because you're a token holder, you get inclusion. So it gets us a lot more close to what was intended on the internet, which is inclusion, access, decentralization. That's what was intended for the internet. In fact, when the internet was created, it was created to keep communications going during a war, during a cataclysmic war, right? Well, guess what? The second part, function, you can look up in the dictionary, is mathematics, a relationship or expression involving one or more variables. The function bx plus c. Sounds an awful lot like blockchain, doesn't it? Like the function of creating an algorithm that creates a block that validates the actual transaction. So function is where we're at now with blockchain. It took decades, literally, to get here. And when we created this wallet that we have now released on a limited basis, we created this access to all that software with all of that blockchain functionality, encryption, modeling, things like that, so that we have that bridge to perform the function of providing access across the globe to these cloud tools.
But here there's I think there is another dimension, which is obviously underlying one. which is the sense of purpose that the community that is growing with us is sharing with us every single day. So in fact, if we were, a technology company just launching a product, so literally we had to find a target group, beta testing our product, and then scaling up on a broader set of audience. While in our case, we have done things very differently, because obviously we have been spending a considerable amount of time, actually years.
Oops, you froze up, Daniele.
He's gone.
Okay, I think we lost Daniele. And so let's get back into what he was saying, which is the idea of function and the number of hours and years that we've spent in building that. And so Alan Tapscott talks about why DeFi and smart contracts are the future of finance right here. So again, this is a fundamental. This was just recent. Go look it up. Special in the Financial Post, July 22nd. The first era of the internet upended information industries like news, advertising, and television. We just talked about that, right? And the second era of the internet, enabled by blockchain, the technology behind Bitcoin. Okay, so 2008, we proved this technology, started to prove it could work. Here we are 12, 13 years later, and other digital assets will make those changes look quaint. That's what Daniele was talking about. It's going to make those changes look quaint. Oh, isn't that nice? You're a nice little unicorn, but are you a decacorn, right?
Yeah, and as he said, you can't compare it to the past.
That's right.
It's not
because this is so fundamental.
Right,
that's okay.
Right.
This is so fundamental. It goes. We're talking about you, and only the good stuff, though.
We didn't share the other.
Yeah, and so he said that the financial services foundational to all industry, enterprise, and human economic activity is about to change. It's about to change. It is changing. So when we talk about that, Daniele, we were just going back and talking about how you said the decacorn is really a totally fundamental new concept, and it's backed by what Alan Tapscott said in his article, where he said the second era of the internet enabled by blockchain and other digital assets will make those changes, the first era of the internet, look quaint, right? and it's so true. This is so big, and it's going to attack every business model. It's doing it from the fundamentals of what we know as economics, and that has been accelerated by COVID. It's been accelerated by the pandemic because everything went digital out of necessity instantly.
Yeah, and DeFi, if we take DeFi as an example, so this DeFi is tackling a quadrillion market value market, and what banks or financial institutions are looking at the moment is obviously they feel the threat of DeFi, but they feel also the opportunity, because right now, you just mentioned before MetaMask, and I can mention also Ledger, so the so-called cold wallet. So right now, the solutions that are being provided to the market to store, to provide custodial services are improving dramatically. And there is a kind of, right now, there are different leading forces for financial players to keep kind of a positioning within these, astronomical ascending journey that is DeFi, and the traditional players trying to find their space in a bigger market. So it's so fascinating for players like us, actually, to position ourselves in a market that, the day before was $1 billion, and all of a sudden it become a quadrillion.
And that's the kind of interesting stuff, Daniele, which is when we see these markets merging, right? There isn't the line anymore. And the lines were there for reasons of the technology not being capable of handling what the middleman used to handle. Like this is really an elimination of this fee-based economy, and that fee-based economy has a giant wall around it. It is very profitable not to have integration and efficiency for most of these fee-based service companies. It really is incredibly profitable. But the problem is that sucks the life out of innovation, and it sucks the life out of inclusion, which is more necessary. I think the UN asked or stated that we will need to create 600 million new jobs by 2035. That's not that far off. That's what our goal is at BlockCerts. I'll say it right now. I want to help create 600 million new jobs, 600 million new entrepreneurial or small business organizations that can create that kind of volume, because no centralized company's ever been able to do that in history. No way can that be done on a centralized basis. It's impossible. So we have to look at the economic pie and say, are we still going to carve out all those fees, right? And I don't care if it's seat fees or trading fees or what have you, and give that to that centralized market, or are we going to decentralize that and distribute it so we can create 600 million new jobs and keep people gainfully building an economic base that's global? That's the way I look at why this statement is so true, why DeFi and smart contracts are the future, not only of finance, but of economics, just pure fundamental economics.
Absolutely. But, and you know, DeFi today is much more than what people perceive, because DeFi is not only, yield farming on a decentralized exchange. It's way bigger than that.
Right. And this is where all those terms like staking and so forth come from. So now let's look at the cloud. Let's look at what it really means, centralized to decentralized, and what's really happening. This is our view of the world. Centralized in software and function, all that function stuff. This is it. Like you know all these names. That's centralized functionality. Decentralized functionality, all the same kind of tools put out in private data nodes, linked up by blockchain nodes, and driven by cross-chain growth. That's our cloud. That's the cloud power to the people that we talk about all the time. This is if a data piece from here and now Slack here drops in, it's a Salesforce controlled data, centralized tools, data, costs, and cloud services. That's what's happening. Over here, if these drop in, there's many, many nodes that never have one centralized environment controlling that. As this expands out, as you see this growth, this is your network effect, right? As you see nodes add horizontally for functionality, as you see it start scaling and moving into blockchain nodes, you start seeing this centralized, that's what it looks like, versus decentralized market, or what we would call Web 3.0 emerge. And when we see that these kinds of systems that will always exist, and these will always exist in some form or another, will start becoming forced to adopt what's happening out here in these kinds of both financial and decentralized utility markets. That's the big merger of centralized to decentralized. And you can see it takes simply moving that one big circle to having that be a circle that's connected to all other circles, right? That's the breakup of control. And if I were to use crypto terms and DeFi terms now, I would call that staking. That is staking. The bigger this node becomes, the more it's staked, but it's not constrained into that one singular element called data centralization or or technology centralization. That's the big thing. So fiction versus function. This is function. All of this is functional. This is all functional. Everything on this page works, right? And then scaling it, the growth, if I were to say, what's Web 3.0? That's it right there. That one image shows you Web 3.0 and how it will scale. And even if it's very small down here, if that function exists, that's the nuggets we were talking about, guys. That's the gold. Like, that's what happened when this first element of the world came out, and you did have your Google and Amazon and Microsoft and so forth, Apple, all of those guys set a foundation of function. Bunch of people built on top of that foundation and created the centralized cloud. The next decentralized cloud is going to look like this.
But look at this picture. So this is pretty nice. And look at the left on the function side, all those brands. And then you look at the right side. What is, in your view, the common ground that share liquidity across those business models? Because liquidity at the end is everything, you know? If you take the first if you take the ones on the left, so is there any liquidity that is being shared across them?
No.
Well, there's no real liquidity into the way they run their business, but only on on the paper stock exchange with just a kind of an uncorrelated trading value. I mean, it's not really uncorrelated, but somehow there's no real tied liquidity pool into the business model, depending the utility they're running into their business model. While on the right side, so especially at the bottom, there is a one-to-one relationship across, so the total value locked, the liquidity versus the business they're running. If you take Compound, it's a lending protocol, and they're making money because of the liquidity they lock into the protocol. So there is a one-to-one relation with the depth and the liquidity they have into their business model versus what they're doing, providing utility. So this means this liquidity correlation to the business model, it did not exist in the Web 2.0 economy.
You know what? I love that, Daniele, and thank you for explaining that, because that's the token. That's what a token should be. It should be a utility with a correlation to, if I build my whole business around this asset, who owns my business? Yeah. Who owns my data today? If I build my entire business around a technology asset and it's a big part of my revenue stream, who actually owns that? Without the cost components centralized up here, I own nothing.
Yeah.
Yeah.
I don't own my own business.
Yeah. And Tim, also, like 3 points. One, just a shout out to Mark Smedley, because we talked to him about Web 2 versus 3.0. And this is, expanded upon that. But number two, what you said, Daniele, if you look on the left-hand side, almost $2 trillion in SaaS growth last year alone in that area. And that went to the companies. It was not shared with any of the users who actually brought in that revenue.
As opposed to the $2 trillion down here that was traded in a open market in tokens. Correct. Now think about what that quaint growth is going to be when you marry that or that and that. That's your quadrillion right there.
Yeah,
right
there's your quadrillion.
Because what you're doing is fundamentally shifting control, tools, and, as Daniele said, liquidity. Now I've got a true fundamental balance sheet item, which is my business, my small business, that I can say, hey, here's the whole package. Here you go. And you get these tools. Now you can do with those tools what you want, because you've got the code, you've got the data, you've got everything you need to run that, because I put it on a node and I'm giving it to you. That's business, digital business ownership that doesn't exist here. The only owners of digital business are the digital business service providers. Period. Software as a service. Think about that. So what we've done is created a cloud that is exactly like a law firm. It's all service-based by the hour cost. 100% services, or an accounting firm or any fee-based firm. It's a services model that the actual data user and provider and builder of the business does not own. Think about that for a minute. And the entire cloud, without decentralizing, will remain like that. Centralized control over data and cost.
That's why it's so important to run fundamental analysis and decide which assets to bet into, because if you look at the whole crypto asset market cap right now, 1.3 something trillion today. Imagine if fundamentals stays exactly the same as they are today, but you have 10 trillion of liquidity coming into it. Right now, all the assets, including Bitcoin, are running in price discovery mode, trading mostly in non-regulated venues. But think about if ETFs, if regulation will come into play when it comes down to KYC AML with regards to crypto assets, and you have a massive liquidity coming in, let's say 10 trillion coming in, what is going to happen? So what is going to happen is that you have the fundamental assets, the assets that have a fundamental value that will exponentially increase because they have an intrinsic utility and a strong network effect, including an incentive system, and all the others will be wiped out. So it will not be like now that you have meme coins that are, or meme token going to the roof because of a tweet, because we're still running in a price discovery mode. But if we put ourselves in 10 trillions more in market cap or even more, you will only see the explosion of assets that have a fundamental value. And you will see what you just shown, so the left and the right, we will see even more extreme advantage to the business model on the right side in terms of network effect and growth. So that's why we're just, so we're just at the beginning of the beginning.
Exactly. And so when we get to this and we see how fast this is actually happening, let's shout out to OpenSea for their $100 million Series B round. And you see, even those VCs are starting to pick up on the fact that we want in. $100 million round that says, okay, we're going to put in $100 million and it was gave the OpenSea a value of about $1.5 billion. What's interesting about this is they were founded in 2017.
Yeah, an overnight success.
And yet another overnight success. About the time, in fact, that was the year we brought up our first POC on the BlockCerts blockchain and actually ran our very first one, again with Mark. He was the first guy to put up the server. Great story. We'll have him on one time. We'll talk about that, how we married the Oracle cloud environment and the Microsoft cloud environment to do that. It was very interesting back in 2017. Mark will remember that story. But so very much this idea that, and what I found interesting when I looked at this was the first 23 million was just last March. So OpenSea actually built fundamentally since 2017. And then all of a sudden, boom, boom, here are your VCs and here are your guys going, there's something to this decentralized thing. Let's figure it out. Still a centralized exchange, of course, but very much based on what's happening with NFTs and DeFi, and very functional too. So
but this is interesting because it gives us another interesting perspective, because those models, I mean, these guys managed to survive for years, and others, Shift is another one, literally without any money, without any seed because they make money.
Welcome to our world.
Yeah, but they make money. They make money with Bitcoin and others, and they managed to survive for years.
Right.
So shape shift. Eric, for years, he said, "We're not making money. We don't even have a revenue model or monetization model right now. We're just spending and burning money because we made a tons of money with Bitcoin." Getting into early stage. So there's a bunch of companies that, thanks to the fact that they started early in the space and they make money, they make profits, they have a bunch of Bitcoin and other currencies, other tokens, they managed to sell and survive years. So because here, 2017, it's 4 years.
Yeah, and it's the fundamental of bootstrapping these things all the way up until you actually get that market attention, and then look what happens, right? So this is why your Deca, what'd you call it?
Decacorn.
Decacorn. Thank you. This is why your Decacorn is likely to happen now, because in the early days, being one of those pioneers in the early days, trying to explain to people what blockchain was to everybody from, and I've been through all the ringers and what we were doing. And people going, I think you said it earlier in one of your posts today, let's stay foolish. Like, how foolish is that? Well, let's see. Let's see if this is foolish. Like, there's a lot of engineering here. Let's see if we over-engineer it. I heard that 1,000 times, right? And it basically boils down to that one picture. Fact versus fiction, function versus fiction. If you've got function, which we've got some crazy powerful function, super exciting to roll it out, and we'll see. Was it crazy? Are we? Stay foolish, you said, Daniele. And here's to the crazy ones.
I said stay humble, and in bracket, stay foolish. So
stay foolish,
stay humble, in the sense that we're not reinventing the wheel, but we're very passionate in what we're doing. We believe we have the opportunities of our lifetime. That's why we are all into this. But we stay humble and foolish.
And so we'll call it FoolishEnomics, right? We're just foolish enough to think that we can change the world, and that's what we're really trying to do here, and also change the way people think about fact versus fiction. I love this book that I found, Teaching Critical Thinking Skills in the Age of Fake News for Students. And I love, obviously, my favorite guy to quote, Einstein: education is not the learning of facts, but training of the mind to think. So think, and think way outside the box, way, way, way outside all those boxes. But think, like, the secret is think. Does Dink Doink sound like something that has function behind it, right? And if a tweet goes out, is that something that I should actually just jump on? If I'm a day trader and I'm building algos to go grab those pops, sure, that's function. That's absolutely what's going on. But if I'm looking for real functionality, real utility, which most people are, then is that fact going to help me or hurt me? And that's all we want to talk about today, is education and thinking through. We get a lot of ongoing questions. When are you launching? What are you doing? Guess what? We've been launched. One of our divisions that I don't talk about that much is already doing in fintech $1 billion a year. We're just improving the processes and putting the blockchain behind it. It's already doing $1 billion. So there's true function into all of this stuff with lots and lots of infrastructure. And our partners there are brilliant. They built a great engine already based on centralized technologies that they're now creating more control over and decentralizing. It's just model after model. Most of the fact that we have just isn't driven all the way down to where it's self-serve, which we will be delivering in July and August, right, Dan?
We will. And one thing that you're talking about kind of reminds me of another illustration Mark sent to us the other day. And That is, what can you see in the iceberg versus what's underneath?
That's right.
And we have an incredible amount of announcements and new things that over the next 90 days we'll be sharing as we start to roll this out.
Yeah, so I always love that analogy. Don't be that captain of that ship. It's called the Titanic.
Right.
I think
Listen to your navigator and say, hey, Captain, maybe slow down and bear off 50 degrees because we're going to hit an iceberg and sink, right?
Well, I wasn't talking about that kind of iceberg. What you can't see, it's pretty exciting what we're going to be
doing. The power of what's under the hood is what we're talking about.
It's like what you always say, Tim, about Netscape. About Netflix. I'm sorry.
Yeah. Netflix, the power of what those streaming algorithms are is what drives everything from streaming movies to gaming now. It's just incredible, the power of that infrastructure. It took decades to build it.
Right.
And this took decades to build. So look for function and separate it from fiction. And I think that's the world from here today.
It is. So parting thoughts, Daniele, as we wrap this up?
Yeah, no, what I was saying is that, so beside the announcement part, I think it's worth reminding that we have also delivered. So, which is, the wallet to the first set of users. And we are working on a narrative. We communicated to our channel partner that we're going to release kind of a draft note first to a restricted number of people on how to deploy liquidity on decentralized exchanges. And then we'll extensively share with the rest of the community. We are doing those, the top of the iceberg steps that have a big underneath stuff that we are engineering. I just want to remark, we are not just announcing, but we're also delivering.
Well, and Daniele, I want to point out, spoiler alert, we're using it right now.
Yeah.
So meet certain, spoiler alert, when we release this at scale, unlimited video in your pocket for everybody who's part of our community. Unlimited, right? So unlimited video. I sign documents every single day using Sign Certain. It's live, it works, it's cool, it's authenticated signatures. You don't sign if it's not you, all of that. We've got I Am Certain, our private chat rooms that can be turned into an entire business from one chat. And the Work Certain model to flow an entire business to create anything you want, from something as simple as starting a meeting like this to taking it. This entire meeting could be turned into a business model with the click of a switch. We are delivering. And not only that, the other thing I'd like to point out, and I heard this from one of my teams, I just got to say this. One of the video providers out there that was pitching their videos on a public webinar,
which I was
using Zoom. They weren't even using their own platform. So I have to point out, we do not use other people's platforms. I don't sign documents using DocuSign. We use Sign Certain. I don't do video on Zoom. I use BlockCerts Meet Certain Video. And I don't do chats with my team or anybody in the world on WhatsApp or Skype. We use I Am Certain, and it's all in one place. I get one login, and it's private key protected. I
think even more, I think, and I don't want to say we are the first experiment in the world. I will make some research, but I think we are. I think we are the first company that is streaming technology while building it.
I think you're probably right.
So we are streaming this while we're building. So this means we give the people the opportunity to see real time how things are going. And I think obviously there are people saying, hey, you announced the week before, what's going on today? So those things happen in weeks or months. And sometimes we have a feeling to deliver in a month and it takes 3 or 4 months. And that's why we're here to repeat. But I think we are streaming technology while we're building is essential for people to stay tuned on us, because we're just showing what we're doing.
And I love to say it, we eat our own cooking, and it's a really good restaurant. So please join us, stay digital, visit our thumbs up on the YouTube, and visit our tokens and become a member of our community for real, and get digital. Stay healthy, stay safe, and let's keep this thing going.
All right, we have another one coming next Friday, so can't wait to hear what that's about, even though we've been talking about it. So thanks everyone for joining us. Thanks, gentlemen. Great convo, and talk to you next week.
Okay, take care, everybody.